So January 1st, 2025, I decided to fund a Mumu account with $100 to prove to you it's never about how much money you have in your account. It all comes down to one thing, and that is your strategy. You could have $1 million, $1 billion in an account, but if you don't have a good strategy, good setup, you're gonna lose money. So we're gonna be talking about some entry points or exits, our full risk management behind this trade here. And guys, we're gonna be doing a full update on this, on this challenge. So hope you guys all enjoy it. If you guys are watching, my name is Carter. I've been a full-time trader in the market for the past 7 years. And with that being said, we do have an amazing school community where I teach people strategies, how to find stocks, my approach, psychology, emotions, all things trading. So check it out down below. And you guys can get 50% off right now by using code SUMMER. It's the last day for the sale, and there's only 2 spots left for that code. So sign up. I'll see you guys in there, and let's jump into this. So, all right, this past week here, we did take one trade on this account. Now, one of the main reasons I don't trade every day with this account is because the PDT rule. This is also known as the pattern day trader rule. So one of the main issues with starting a small account is you're limited on the number of trades you can take. Now, pretty much what it is, you only can take 3 trades, 3-day trades within a 5-day trading period. Now, the reason why they do this is actually to help you not trade your account away. Now, obviously, if you're just starting out, this is actually a good thing. But as somebody like me, where I've been trading for years, this kind of sucks. But all right, this past week here, we took one trade. Our total profit was $4.65, which may seem, like not a lot, but that is over 2.3%. So I'll take that any day of the week. And the reason why I say that is because if you guys can make 3% per month, you're already in the top 5% of all traders in the entire world. So if you can take a step back and realize that, and then you can go, okay, well, he made 2.3% in a single trading day. So I'm well over that 3% this month, which is astonishing. All right, let's turn to the computer and see the trade that we took. All right, so the broker I use, like I said, is Mumu. I'll put a link to them down below. You guys can get up to 30 free stocks just by signing up. But the main reason I love them is because they offer great charting, scanning, and more importantly, fraction shares. So when I'm first starting out, I don't have, hundreds of thousands of dollars to buy full shares of Tesla stock. I only could buy, 0.7% of a, share with Tesla here. So when looking at Tesla stock here, one of the first thing I look at is actually this hourly chart here. And actually, we had this beautiful breakout today, we took a nice short on this trade with our larger account, but that we'll make a separate video on that. Now, looking at this here, you guys can see just the heavy resistance up here where it hits it, sell off, right? Hits it, sell off, and then the heavy amount of support in the zone, right? So we have support, resistance. So ideally, you'd want to buy in support, sell at resistance. Now, yesterday here, we saw the stock squeeze up to, this anywhere from like 279 to highs at 289. So it had that great window. But beforehand, one of the things here that we were looking at was even a lower time frame. You want to look at several different time frames when you guys trade. I always just look at the hourly to find the general support, general resistance, so we have an idea of some good entry points. After that here, I went to the 5-minute chart. Now, I'm going to throw these moving average lines back up because I really use them heavily for this trade. So looking at this here, we saw this stock hit that blue moving average line, which is a 90-day EMA line, which has tendencies of acting as support and resistance. So you can see it hits it pre-market twice, right? Once, twice, and then it explodes up. I couldn't get in on this trade. Now, the reason why is because it moved up too fast. I felt like I was chasing, and by the time I could have been, in on this position was 284, which, yeah, throughout the day, you would have made money, but you would have had a lot of volatility beforehand. So after that, we waited for some sell-off back down to that level. So the stock popped up and it sold off, right? Back down to that 90-day EMA line. Now, one of the good things about this is we saw this doji star, which has tendencies of being a very, very bullish candle or a reversal candle. So it hits this here, and then we had this beautiful move up, okay? We had that great move of buying pressure, okay, where it popped up, and it popped up over that 50-day EMA line, okay? And this was our entry point near and around 281. My thought process was this. Let me go ahead and break it down. Entry above that, keeping our stop loss below that lower wick down here for a possible push up to at least the resistance there. So it was a 2.7 risk versus reward there, which actually is pretty good. And the reason why is, let me kind of show you why having good risk management is so incredibly important. Is because if you're starting out with $100, right? Imagine you find a stock like this, not even every day, but maybe once a week. So 52 times over the course of a year, you're risking 1%, 1 to 2% is a very standard thing. And then your risk versus reward is 2.7. Okay. Now your win loss percentage, even if you're at 50%, guess what? You're still profitable over that course of the end of the year. So, you've almost doubled your account, which is really, really good. So now if your win loss is 40%, guess what? You still had a 28% return. Guess what? If your win loss is 35%, guess what? You're still profitable with the 14% return. So now as you look at that and you go, well, what happens if your win-loss percentage is 80%? You've more than doubled your account, and you're doing really, really well. So that's what I think is very important with traders to realize is a lot of it roots down to risk management. And that's why I use Mumu, because they offer this really good tool. So I can kind of plug it in just to a basic trade return calculator there. Now here, let's go ahead and draw this out. So the stock popped up, it hit that 50-day moving average line, which wasn't a big concern because our stop loss was lower. And now it was just below that, 90-day EMA because it did pop up a little bit. And then it rallied its way up, right? Rallied its way up, rallied its way up. And then we got out on this position as it started to sell off here. You can see that little trend line. Personally, I thought we were going to get a trend line kind of like this, where it just started stair-stepping its way down. So we pretty much just sold a position there, and it worked out really, really well for us. Now, we also looked at other indicators like the MACD indicator for that sell point. So you guys can see where we had this huge crossover, and this would have been a good and really, really good entry point right here with the MACD crossover, with that signal going up through the MACD line. We also looked at the RSI, which was undervalued and then overvalued when we sold. So everything worked out in that realm. We also went to that, some lower time frames here, like the minute chart, to figure out some good entry points and making sure we're getting in on a good price here. And you guys can see a nice little trend line going here. But overall, this was a fantastic trade. Very, very simple. And I love that. I love the expression miss. Make it simple, stupid. I'm not the type of trader that's going to overcomplicate trades. I'm just going to keep it basic and do what I understand and do what I know. So guys, I hope you guys all enjoyed it. If you did, smash that like button and subscribe, and we'll see you guys in the next one. Take care.